Hey everyone, Schuyler Williamson here, coming to you to talk to you about principle of investing number 4. The title of this principle, I just call it Know Your Discount Rate, or Know Your Target Return. And the easiest way that I can tell you how to do that is look at all of your investments and see which ones you've said yes to, and look at the ones that are kind of the average investments and make that your number. See what your return is and make that a number. If you've never made an investment outside of just putting money in the stock market, then run a history report on your returns in the stock market and see what that number is. There's going to be an annual return that you've achieved throughout your time owning stocks. Look at what that number is, and then that is your basis for your target return. And if that return in the stock market's been 12% over the last few years, well, why would you invest in some real estate that's going to give you below a 12% return? No, that's your hurdle. So anything that you look at that you could invest in would have to be above 12%. And if it's not, then you would just take the money you were going to invest and invest it in the stock market. So you got to have a hurdle. For us, we need to see at least a 15% internal rate of return on all the projects that we look at. And that's being very conservative. So I won't speculate that a property is going to appreciate more than 4% a year. So 4% a year with realistic rents and not factoring in tax advantages. Does that property give me a 15% return? If it does, yes, we invest in it. If it doesn't, then we pass. In reality, when you're looking through a lot of investment opportunities, you're going to see the 18, you're going to see the 20, you're going to see the 25% return opportunities, and you just got to take a close look at them, make sure that they are achievable. And if you think they're achievable, those will be the runs that you invest in. So I would just say, the more you become an experienced investor, the more opportunity you're gonna get to look at, and the more opportunities you get to look at, the higher you get to set that target rate of return. So again, when you're setting your target rate of return, look at all the investments that you're in right now, let that be your basis, and just know that if you can't beat that return in the investments you already have, then you don't invest in anything else. But if a piece of real estate comes along and it's high enough, then you go and invest in that. And then at some point, you will know what your basis is. And in every deal you look at, it's a yes or no, because it's either above that or it's not. So if you like this principle here that we've discussed, please do follow us on our social media accounts or subscribe to our YouTube channel to hear more.